Hello, my name is Bruce Lane from GTI Energy. We're an ASX listed company with projects in uranium exploration projects in Wyoming in the US. So what I'll do is share my screen to you now and run through investor presentation. We've just announced a maiden JORC compliant uranium reserve at our Low Herma project, and we've also increased our exploration target. And I'll obviously go through that in a bit more detail. Please take some time to look at the disclaimer and consider that there will be potentially some forward-looking statements in the presentation. So please be aware of that. So to summarize, GTI Energy is a uranium explorer. We're very focused on in situ recovery, uranium mining, and I'll explain more about that later. Our key projects, our lead projects, are in Wyoming in the United States, which is the leading uranium production state in the US. And the good news is that GTI has already discovered in situ recoverable uranium, and we're on a path to expanding that for development. So I want to spend a little bit of time talking about the US and its nuclear power requirement and why we're in the US. We made a conscious decision to explore for developed projects in the US because the US is the world's largest customer for uranium. It has the largest nuclear power fleet and produces just short of 100 gigawatts a year, which is 20% of US baseload energy, and it's 50%, importantly, 50% of green energy. The US Department of Energy recently supported a project called a report called the Liftoff Report, which advocates for a tripling of that by 2050. So there's a very strong commitment in the US administration to nuclear power. I think it's important to reflect on where the US gets its uranium from at the moment, and as you can see from this pie chart in the middle, a very significant proportion of uranium comes from Kazakhstan, Russia, the likes of Namibia. Obviously Australia supplies some, and so does Canada, but virtually no uranium really comes out of the US at the moment. You can see there 5%, which is a situation that many would like to change and are making efforts to change as we speak. A couple of interesting things have been going on with supply and demand for uranium. I think since Fukushima and as a result of the entry of the Kazakhs into the uranium market, and in addition the mega tons to megawatts program, which I'll talk a little bit more about in a minute, there's been an oversupply of uranium in the market, and that's really now an historical artifact. What's occurred now is that a lot of the, or actually most of the secondary supply and the pounds that were available to be sold in the spot market are no longer there. There's a number of things that have driven that, but in the primary production part of the supply chain has really died, and so the combination of both those secondary pounds going away and primary production dying because of sub-economic pricing, we've got a real contraction in supply, as you can see from the graph there. At the same time, rather than the industry also dying, the nuclear power industry, we've had significant restart announcements, reversals around shutdown decisions, and really significant new builds. So going from 440 nuclear reactors roughly in about 30 countries, there's 59 currently under construction, and there's 100 more in the ordering and planning stage, and there's at least 300 more proposed, and that 300 more proposed is the bit that really no one could have seen even 10 years ago, the sort of scale of build that's going on. So we're seeing a significant supply-demand gap growing. Look, there's a lot of history in the uranium market. This is a very spectacular chart or picture, and what it really shows is that the Kazakhs, as you can see in the blue, have really grown as a supplier in this market. And what's happened with the bifurcation of the market now because of the Russia and Ukraine conflict, it really means that those pounds are not going to be available to Western suppliers. So that really helps highlight the size of the issue for Western suppliers. And as I said before, Western and particularly US uranium mining has collapsed. And what I'll show you though in a minute is that is in the process of turning around, and that's really the backdrop and the reason why we're actively exploring. Uranium prices, you can see they're spiked back in the mid 2000s, 2007 to 2008, and then we had Fukushima, and of course price crashed away. But the good news is that it's on its way back, and the current price looks like it's around the $56 to $57 mark. But we see that as continuing to strengthen for some time. So what's happening in Wyoming, where we are, is very, very encouraging. Our near neighbours, UR Energy at Lost Creek, they're only 10 miles away from their Great Divide projects, are back in production, and they've made a decision to move on and develop their Shirley Basin project. So that's a very, very encouraging sign for us. In addition, UEC have come out very recently and said they're going to restart their Willow Creek operations. And we know that the Lance project owned by Peninsula is in the very late stages of finalising their restart of production. Now, the thing that's significant here is that these are all in situ recovery producers, and we know that they're getting back into business because they can make really good money at the current uranium price. We don't believe that hard rock projects are particularly attractive at the current pricing, and we don't believe that new start projects are going to attract capital at the current pricing. But these brownfields projects and restart projects can certainly make very good money. We believe that in situ recovery, all-in sustaining cash costs are more of in the region of $40, maybe as low as $35 in some cases a pound. And we know that the current uranium price, new contracts are being written north of $60. So we believe there is really good money in it for these projects with those low all-in sustaining cash costs. A little bit about in situ recovery. The other reason we're really interested in Wyoming, why we really like these projects, is because we can mine them using in situ recovery techniques. So it's the lowest impact form of mining from an environmental point of view. It's also very low cost when compared to other projects to build. So the capital expenditures traditionally, conventionally, a lot lower. And we know that at least 50 to 60% of the world's ISR world's uranium is actually produced using in situ recovery techniques. So that really speaks to its the economic benefits of in situ over other forms of mining. Here's a picture of an open cut mine in Namibia versus Cameco's Smith Ranch. That's the largest uranium mine in Wyoming. It has a licensed production of around 5.5 million pounds a year. So and there's about seven permitted facilities in Wyoming, and there's another 2 that have been licensed to build. So just talking about GTI's projects, we have our focus is to build in situ recovery uranium resources. And where we're exploring are very close to the infrastructure and production assets of a number of major players, and I'll show you a bit more about that. Our exploration is very targeted. We've got historical information to work off, and so there's no wildcatting here. We're really at the resource development stage rather than the pure exploration stage. And what we're trying to do is generate options with those projects, obviously options to develop, but possibly options for corporate activity along the way. So here's a map of both the Great Divide Basin and Powder River Basin. The yellow dots being GTI's projects, and you can see down in the bottom left-hand corner, GTI's Great Divide deposits around 10 or 15 miles away from the Lost Creek Central Processing Plant owned by UR Energy, which is in production. And then in the middle of the screen, our Low Herma project is around 10 miles away from Smith Ranch Highland. That was the photograph I showed you earlier. And that is the largest in situ recovery central processing plant in Wyoming. It's and indeed in the US, with 5.5 million pounds of licensed production. And all around us, we've got UEC, we've got Energy Fuels, we've got another Cameco project up at North Butte. And then we've got Dewey Burdock over on the border in South Dakota, and up the top there we've got Peninsula. So all of those production facilities are within around 100 miles, maybe 110 of our projects. The other interesting thing is that these plants normally work on the principle of in situ recovery, satellite mining, or hub and spoke mining. And what typically occurs here is that a central processing plant will be built next to a large deposit, or a significant deposit of, say, up to, around the 8 to 10 million pound mark. And then once that bore field is depleted, the company will then move on and develop satellites by drilling a bore field and putting an ion exchange plant next to that bore field, and then trucking the resin beads from the ion exchange plant back to the central processing plant. So that those beads are then a very high value cargo and can be transported with no problem. The other thing I'd like to draw your attention to here is just to show that our deposits are certainly working their way towards being significant enough in this region to be commercial. So just a bit more about the location of our projects. You can see here on the right, that's basically the same map I just showed you, with our Great Divide and our Low Herma projects highlighted there. They're around about 100 miles away from each other. And then one on the left is an expansion of those project areas, just to show the specific ground holdings and their proximity to both UR Energy, Lost Creek right in the middle, and to Rio Sweetwater Mill, which is abandoned and rehabilitated to the south, but also the numerous deposits, which are those yellow blocks that you see there. So with our projects, Low Herma is the most advanced, and then our Great Divide project, we've done 2 rounds of drilling there, and so we'd call that our sort of intermediate project. And then we have Green Mountain, which is a little earlier stage. It still has exploration drilling on it, but we're working on that to refine our drill targets for that project. So here's a summary of our resources to date. We started the year without any JORC resources, but we've declared a resource at both the Great Divide Basin and at Low Herma, giving us a total inferred resource of 7.37 million pounds. The average grade there is around 600 ppm, which we know is production grade in the district. So we're very encouraged about that. We've been able to get that Low Herma resource out at a very low cost and very quickly, based on historical data. We also have a significant exploration target upside now. So if we put together that inferred resource at 7.3 million pounds, and we're looking at sort of 12 to 20 in round terms of total exploration target in addition across our projects. So total resources are somewhere around the 20 to 30 million pound mark, and that's without us putting any resource targets on Green Mountain, and we hope to do that soon. We've got some geophysics being flown there, and I'll talk a bit more about that in a minute. So the interesting thing about Low Herma is that there's 2 sand formations there, and the current drilling that we have, there are around 800 holes that we've got that are in our project area that are down to about 500 feet, 400 to 500 feet in the Wasatch Formation. But we haven't yet tested the deeper formation, which is the Fort Union, and Cameco produces out of that formation 10 miles. Nothing to say, no guarantees that we will hit mineralization when we drill deeper into that formation, but that is one potential from the drilling program that we're working on for Low Herma. So our Great Divide Basin project, as I said, we've got an inferred resource there. We've drilled quite a number of holes. We've also just conducted some geophysics over our Loki West project up there in the top right-hand corner. And we do have some holes permitted here that we could move on. Our current focus, though, from a drilling Low Herma, but we'll continue to assess the Great Divide area for further exploration as we go along. In our Green Mountain area, we there's an area marked there with a black dotted line around it. That's the area we've flown with an aeroplane and a suite of geophysical instruments. We're hoping to get the final information and interpretations from that program in the next 2 to 4 weeks, and we'll announce the results of that. But we know we've got mineralization on this project, and as I said, we already have drill targets, and we'll use the geophysics to refine those drill targets. But certainly there are extra pounds in the ground in this area, which are not included in that in the exploration targets and in all the resources. And we hope to add to those pounds sometime, maybe in 2024. So just to summarise what's coming up, we have got a drilling program in the planning and permitting stage for Low Herman. We hope to drill that at the back end of this year, but if not, that would roll over into 2024, and that is a possibility. We've got the final geophysics expected soon, and as I say, hopefully within the next 4, maybe 5 weeks, we can say something about that, and that'll help us to then further refine the planning and the permitting for drilling on Green Mountain. And then next year, really it's about taking the results from any programs that we've got in place and interpreting them for further drilling. So just to summarise our corporate scenario, we've got just under 2 billion shares on issue. Current share price is around 0.7, 0.8, which gives us a market cap in the range of around 15, sometimes up as high as $18 million. At the last quarterly, we had around $3.5 million Australian in the bank. That doesn't include some bond money that we've got due back from the state of Wyoming, which has been approved for release. So it was around $4 million Australian at the end of the last quarter. So we're funded for the ongoing activity. Of course, we'd always like further money. We have no immediate plans to raise further money. Just a little bit about our management. I'd like to draw your attention to James Boffman. Jim has been a geologist and is a geologist, and has had a successful career around Colorado and Wyoming in particular. He was the former president of High Plains Uranium, which was sold to Uranium One back in 2006, and he was also a founding member and CEO of Cyclone Uranium. And then in addition, we've partnered up with Doug Beam at BRS in Wyoming. Doug's had a long and illustrious career in the uranium business, both as a geologist and an engineer, and he's built and rehabilitated mines of various kinds, including significantly a lot of ISR uranium projects. So he's very familiar and very competent in that area, and has been fundamental in our activities to date. That really brings me to the conclusion. I guess what I'd like to leave you with is that the US really has recommitted to nuclear, along with many other nations in the world, and the demand for nuclear power is going up. The uranium price uranium demand and uranium price are also improving dramatically, and I think over the last couple of years, the uranium price has doubled, and we expect to see it strengthen a lot going forward. Our projects are in what we believe to be a great jurisdiction, one of the best, and certainly very friendly to uranium. And we plan to deliver more JORC resources going forward in an area that is surrounded by major players and infrastructure. So we think GTI is positioned well to benefit from exploration success and a strengthening uranium price, and I'd encourage you to have a look a little deeper into the company and consider investing. So thanks very much for your time.